Michelle McCory with our breaking news.
Thanks, Phil. And Blackberry is getting a reprieve. It has agreed to a deal to go private. Canada's Fairfax Financial Holdings is agreeing to buy it. The company offered Blackberry shareholders $9 per share, valuing the company at $4.7 billion. Right now, the shares are slightly down in after-hours trading. Now, for more on this deal, we go to our correspondent, Kristiaan Yeo, who is live at the Toronto Stock Exchange. Kristiaan, what is the latest?
Yes, Michelle. Well, this announcement follows what you might call Black Friday for Blackberry. Trading was suspended on its shares as the company announced job cuts of 4,500 workers around the world and an expected $1 billion loss for Q2. It painted a bleak picture for Blackberry, and hopes were fading that they'd ever find a buyer, but they have. And Fairfax Financial is one of Canada's largest insurance holding companies, and its CEO has long-standing ties with Blackberry. Prem Watsa was on the board previously, and he's often compared to Warren Buffett, Canada's answer to Warren Buffett. With that reputation, with those deep pockets, comes a confidence now that if anybody can bail Blackberry out, it's him.
Blackberry looks set to start a new chapter with an old friend, just days after a bleak announcement that the company was laying off 40% of its workforce and bracing itself for $1 billion loss. The company agreed to a buyout by its largest shareholder, Fairfax Financial.
Certainly, the employees at Blackberry are feeling a little better today, but they're still not out of the woods. That deal, that final deal, still has to be nailed down.
The investment firm already holds a 10% stake in Blackberry. Its offer of $9 a share for the remaining 90% of the company values the firm at $4.7 billion. A deal with Fairfax was widely expected. Fairfax Financial's CEO, Prem Watsa, was on Blackberry's board, but stepped down in August when Blackberry first began its search for a private buyer, citing a possible conflict of interest. Watsa has said Blackberry's turnaround would take years, not months, which is consistent with his investment philosophy. Watsa is a so-called value investor, known for taking the long view and holding on to companies they buy instead of breaking them up and flipping them for a profit like private equity firms often do. As for Blackberry's existing leadership, although nothing's been confirmed, it's believed Torsten Heinz would stay on as CEO.
Assuming this goes through, the new owners would not want to change horses in midstream. He's got experience in running this company for the past year, and I think that they'll stick with him.
The deal would give Blackberry time to refocus and regain ground without the fear of stock fluctuations weighing on it.
As a private company, it can take time to hone its strategy, hopefully become more solid in its financial footing, and then in a couple of years it'll come back to the public market.
And Fairfax is expected to complete its due diligence by November the 4th. And in the meantime, Blackberry's free to consider other offers put on the table. And now that Fairfax has set the bar, it may well get other offers. One possibility, the co-founder of Blackberry, Mike Lazaridis, he's reported to have approached several private equity firms about tabling his own offer. At the moment, though, Michelle, this is the only official offer on the table.
That's right. Thank you so much for that update, and I'm sure you'll keep us posted. Kristiaan Yeo live for us in Toronto. Now,